Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 25th, and I just wanted to take some time and talk about what moved markets last week and kind of what has happened this week was we've seen increased volatility enter into the marketplace and wanted to talk about we see this being a long-term event or a short-term event and where we see markets moving from here. So last week was a little bit of a down week in the markets. You saw the S&P 500 off about 80 basis points or 0.8%, and which is fine. It's still up 4% for the year. It was a little bit of choppy trading as we're trying to navigate through this time period where we're seeing some increased volatility in the marketplace, and really wanted to take some time and explain what's causing this volatility. And so if you're not paying attention to it or haven't been watching it, the 10-year Treasury note from the U.S. Treasury note for 10 years has really gone up tremendously in the last week. We're talking from about 1.2% to today touching levels of 1.45%. And so when rates start to creep up like that, a lot of your high PE stocks or high stocks with high price earnings multiples that are your growth companies, well, those margins become smaller as their cost of capital increases. And so what happens is investors will start to sell off of those names of those high PE stocks. And that's what you're seeing in the market as these rates are creeping up. You're selling the high valued stocks off. Now, the encouraging thing that you're also seeing in the market is it's not like the whole market itself is selling off where everything is down. But what is happening is what is being sold is the high value and the things that had great returns last year. And those are being sold and buying the names that have underperformed or the value names that we've been talking about. So what we're seeing is a sector rotation from growth to value. And remember that these indices are market cap weighted by the largest market cap companies drive the biggest percent returns in these indices. And your largest cap names, your large cap names that are up the top are all large cap growth names. And those are being sold off and the value names are being bought. And so you're actually seeing some positive action in the stock market, even though on the surface it looks like it's a down day. So if you're positioned correctly and understand what's happening with the 10-year rising and the influence it's going to have on your high earning, high valued stocks and the impact that it's going to have in the rotation into those more cyclical names, you're going to find yourself better positioned, as we don't believe that this volatility that we're seeing right now is going to be long-lived. We believe that it's going to be very short-lived as we have so much liquidity in the system, as well as it looks like additional stimulus to come. The economic data that we are getting is better than what we anticipated or expected. We have vaccines on the way and a reopening coming sooner, it appears, maybe than thought before. So as always, if you have questions about what's going on with your individual portfolio or what's happening in the stock market, feel free to give us a call. We're easy to talk to. You can call us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Everyone have a wonderful rest of your week. Thank you so much.